Mortgage delinquencies in Canada are on the rise, and Toronto is leading the pack. But is this the start of something bigger, or is it just a bump in the road? Hi, my name is Deloshan, and welcome back to another episode of Real Estate Watch, where we keep you up to date with what's going on in the market. In today's video, we're going to break down what's really happening with the Canadian mortgage delinquencies and why this trend might be more serious than it looks. So to start, what is a mortgage delinquency? A mortgage becomes delinquent when a homeowner falls behind on payments, specifically by 90 days or more. It's a key warning sign that people are struggling financially or that the market is slowing down. In a hot real estate market, even people behind on payments can sell their homes and walk away with some cash. But when homes stop selling, delinquencies start piling up because sellers can't escape without taking a loss. So, according to Equifax, mortgage delinquencies in Canada just hit a 4-year high, and the national delinquency rate rose to 0.22% in Q1 of 2025. That's up 4.8% from the previous quarter and 22% higher than last year. Since late 2022, the rate has jumped over 57%, although it's still below pre-pandemic levels. And guess what? Toronto is the epicenter of it all. Most of the trouble is in Toronto, where mortgage delinquencies are now at their highest level in over a decade. Now, meanwhile, cities like Vancouver and Montreal are also seeing increases, but still below the national average. Now, you should know that the numbers may be underreported. Why? Well, here's something that most people often miss. Unlike the United States, Canada's data doesn't always capture riskier loans. Now, what do I mean by that? I'm talking about private lenders, which are often used by higher risk borrowers and don't always report to Equifax. So the real number of delinquencies could be higher than what we're actually seeing. Also, Canada tracks delinquencies at 90 plus days late, while the US uses 60 plus days. So that also makes our numbers look better than they really are. So what does this all mean? Yes, the mortgage delinquencies are still low by historical standards, but they're climbing fast. And that tells us that the market is under stress, especially in overvalued markets like Toronto and the GTA. It doesn't mean that a crash is guaranteed, but it does mean that people are starting to feel the squeeze. So what are my thoughts on this? Well, keep an eye on the trends. Rising delinquencies are one of the earliest signs that things in the housing market are shifting. And the faster they rise, the more pressure we may see on prices and on homeowners. So if this video gave you something to think about, do me a favor. Hit that like button, subscribe, and for more real estate insights, and drop me a comment below. Now, do you think that this is just the start of something serious, or is it just market noise? Let's talk about it in the comment. I'd love to hear your take. Thanks for watching, and I'll see you in the next video.